All right, folks, good morning. Welcome to Top Trades Live. We have some new folks joining us today, so I just want to do some quick intros. I'm Greg, obviously, and I'm joined by my colleague and buddy, Enrique Abeyta. Enrique, also a trader, 30 years experience, hedge fund manager. We love to bounce ideas off each other, and that's what we do on these calls. We talk markets, we talk charts, we talk big ideas, short-term ideas, everything in between. So Enrique, welcome. Good to see you.
Absolutely. Good to see you on a fine, sunny yet cold day here in New Milford, Connecticut. So,
Well, I wanted to start with a quick stat that I pulled up because I wanted to get your thoughts on this as we dive in, because I think we're still in the same spot we were in last week where we have this stretched market to the upside, and we're kind of sitting here waiting to see how things consolidate, how far the market dips, waiting for new trades to set up basically in this environment. But I saw this from Bar Chart on X, Twitter, yesterday actually. And the post is retail traders bought $4.1 billion of US stocks during the first 3 hours of today's
yeah.
trading. That would be Monday, which is the most in history. So are we seeing the baton being passed to the quote unquote dumb money here, and that's what's sort of powering us higher? How do you see this playing out right now?
You know, it's an interesting concept, and I'm not going to outright dismiss it. I'm a big fan of Robinhood, the trading platform.
Me too.
And part of me, I'm a big fan of the stock too. We both are. Like, I know that, but I'm actually Robinhood, the concept. Part of me, and I was around as an active trader during the internet bubble, which was the first real burst of retail activity that we saw at that level. And a lot of folks on this call will remember that, decimalization only happened in like 2001, 2002. We were still paying big brokers fees 10 years before. So while that felt very engaged, I feel that maybe the barriers to entry to trade have come down so much. Like, you pull your phone and you pull up the Robinhood app, and, you could be buying, I could be buying a half a contract of Tesla options in about 15 seconds, and so I wonder, and you see it in the options volume clearly, and don't even get me started on the 0 day to expire, but we see it in the aggregate retail activity as a percentage, that I wonder that as our society has continued to get richer and richer, and we can talk about inequality and all that, but the barriers to entry to getting and actively being involved in the market, it's a very interesting concept. Is that I think we're seeing the development of, I won't call it a new investor class because it's been there, but making it a more material investor class than before. You had pensions and hedge funds and mutual funds. I think it's very interesting. It's very interesting to me.
Do you think that maybe the retail action kind of exacerbates this type of I would say like extra buying, maybe like, or like buying beyond some of these levels we were expecting? Do you think it just causes like a snowball of chasing in the markets that causes these V bottoms, or do you think it's more nuanced than that?
I think that the V bottoms are actually caused by institutions, not retail. And let me explain. Is I think that, if you're retail and April Liberation Day happens and you're down 20%, 30%, you're not going to get fired, right? You don't have someone yelling at you. Maybe your wife walks in and he's like, what the heck is going on? But, 98% of people, they're like, okay, I made a decision. I'm down on the stock, or I'm down on my portfolio. And as long as I'm not going bankrupt, or, going out of, I have enough money, I'm going to buy some more. Versus the institutions, I think that there was a lot of risk managing that led to this, where people were just like, okay, I'm down 5, the market's down 6. I can't go down 15. And
Right.
so they sold. And so then the market went down 15. But what happened was, retail, now 20% of the market, just was like, hey, I don't care. I'm down 15. Maybe I go down 30, whatever. And so it caused the market to come back. And then now these people, the institutions, are 80% invested, and now they're trailing the market. Because when they were down 5 and the market was down 6, or let's say they were down 10 and the market was down 12, they're like, okay, I'm going to lock this in. Then they went down 12 and then the market went to down 4, and they're like, holy cow. I'm like, so I actually think the V is happening because of the institutions. They're chasing on both sides, right? Because the way we gap down back, and remember what we talked about all the time, filling the gaps. We were talking about we filled more gaps than I thought we would, but we were talking about filling the gaps. The way we gap down, you had no chance to benefit from risk management on selling. Like, we just went straight down. And so I think it's actually institutions that are causing the V. But it's fascinating. I've been thinking a lot about this V. I love what both you and I did, because we put ourselves in a position that we're winning, we're not losing. Maybe we're not winning as much, but we were open to every option that was out there. But we all have to admit, this was a low probability outcome. Like, when you look at all the data. So again, what you did and what I did was win-win, right? If it goes down further, great. If it goes up, great. The only thing where you kind of go, if it V's right out, maybe we could have made more money. But I'm never ashamed of, not making enough money when there's big potential losses on the table. But yeah, I think things are flipped. Retail's getting bigger and more important, and I think institutions are actually causing a lot of the volatility and the funky price action.
Yeah, that makes a ton of sense. And our own John Sanchez had a question about that, whether or not it matters, whether it's big boys or retail traders, buying right here. I mean, when it comes down to it, buying is buying, right? So, I mean, we're following the charts regardless, but I think it is, worthwhile to at least talk about it or think about it in those terms sometimes. But, my mind is still where it was last week, where I look at this market and I say, gosh, we're really overextended here. Like, I think it's entirely possible that we chop along and maybe go a little bit higher here, but I'm mostly just sort of waiting to see, are we going to have a situation where we need to see SPY retest the 200-day moving average down there in 570? I think that makes a lot of sense, really. I mean, I don't want to be chasing the super hot stocks here. And the hot stocks, I'm talking about the PLTRs. All of these, they've been incredible, and I'm not knocking them. I mean, if you made money on these, that's awesome. PLTR is one of those woulda, coulda, shoulda stocks that I keep on forgetting to buy because I get busy doing other things. But you see something like this, and where the market is right now, I'm not sure that this is something I would want to be tracking to buy. Something like HIMS too is in the same, maybe even more so, where, I mean, we had these incredible run-ups at the start of the year where this stock went from 25 to 70 and then resets. Obviously, it caught at a really great spot. And if you caught this move right here, that's great. But to me, this says okay, I know we're consolidating nicely here, but this is where I want to take some money off the table on a play like this.
Well, I actually, I love where the market is right now, but for a very unusual reason. I, like you, strongly feel that some sort of, pullback is due. And I hammered this home on the Maverick call last week. For new people, I have a call on Wednesdays at another service called the Maverick. The market, the stocks were trading with the market for 6 weeks. Now stocks are trading with stocks. And I don't think that's going to go away quickly. And let me take those two things right there. Stocks trading as stocks. Well, 4 weeks ago, a company crushes numbers, company misses numbers. Just tell me, the market was moving in 1% or greater increments, 60 or 70% of all the days. We had 2 or 3% moves over a 10-day period, half the time. That's just crazy. And so when that's happening, it doesn't really matter what a company says, the potential to break out, beating a number, missing a number. It doesn't matter. It's all about the market. So the stock market was a market of markets. It's just what's your beta to the market? Today, the stock market is a market of stocks. And so that gets me excited, because I think that we can begin to find, and we're starting to see this emerge with the Maverick. We had a great one last week. We've got another interesting one this week. we're starting to find just classic setups, like, what we like to do. You're starting to see classic setups, and it becomes a market where we don't have to be so preoccupied about what the stock market's going to do. We can just focus on the opportunity. Now, in the groups of opportunities, look, I just don't buy extended stuff like this. But go into something like, here, and after we had sold it, go look at something like gold right now. So my view right is that we're going back to some degree of normalcy. Don't chase, but you certainly can react. Gold's bounced a bit today, but this is something you could begin to buy as it trades into that 50 and 100-day moving average. Find these stocks that are pulling back to these moving averages. I think there's going to be more stocks that are your classic setups that are sort of consolidating and then beginning to break out. And so it's funny is I would look for stocks that have in good steady uptrends that are pulling back to moving averages that can be bought again. Gold is an example of not a stock. And then I would look for maybe speculative laggards that don't have a chart that looks like, I was looking at Roblox, for instance. That chart's amazing. But look at things that have that kind of capability but have not done it yet. The one thing that concerns me is I look at Hood, I look at Roblox, I look at Palantir. All of these spec things are just go look at qubits. It's just wow. The last 3 days in particular, everything spiked. So just wait. But I love that we're getting back to a stock market of stocks, not of market betas.
Yeah. So we just closed some options on qubits today into the strength right here. Bottom last week on Wednesday, since you mentioned that. And this was one of those setups where everything was falling into place with retail traders. I mean, the quantum stocks have been incredibly popular. The charts, I mean, this one in particular was just setting up so perfectly with this break above $12 right here. And going back to when this thing spacked or whatever it did back here in 2022, it's finally clearing into blue skies here. And so, of course, there's people chasing it today, which has worked out great. I just wanted to say a few things about this since some people were asking about it. This huge move right here, up almost 30% in a day. This is the area where you want to take some money off the table, obviously, which is what we did. Don't get stuck on round number bias when it comes to selling these stocks right here. I know how easy it is to look and say, like, oh, I have 200%, or I want to get to like 250 or whatever, 300. And you kind of get hypnotized by that. You got to sell into the strength on these, and you're never going to top tick them. Sometimes you will, maybe, but for the most part, you just need to pull the trigger. Because I know some people in the chat were talking about like, oh, if I'd only held it, 15 more minutes or whatever. Don't worry about all that stuff, and if you want to take half off and let the other half ride, or just keep a little piece and let it ride right here. I think this it's possible this could go higher, but the big risk for companies like this is we're not buying these for any fundamental reason. We're buying them because they're breakouts. This is the typical company that could say, hey, we're going to issue a bunch of shares, and raise money in this type of situation. Those are your big risks for something like this. If it moves up 30% in a day, it can move down 30% in a day too. So just keep all those things in mind right here. So you have dilution. Why wouldn't you raise money if you were, this particular company up here?
And let me add a bunch of things to what you just said, kind of what you said. One strategy too is sell 60% and keep 40, because then you've locked in a return no matter what. So that's something I like doing. The second is if you make 100, 200, 3% on your money in a week, book profits. Like there is no world where you should ever be sitting on a 236% return in a week and be like, oh, I messed that up.
Right.
I mean, I don't care if the next day that was going to turn into a 10,000% return. There is never a world where you're up 236% in a week and you messed up, Right. So I put yourself in a position to win, because the other thing that's going to happen, and to what Greg also mentioned, another concept, which is symmetry in the markets. and we talk about this all the time, I'm going to tell you that QBTS, this is going to be back below 10 at some point in the coming weeks, months. Like it's just a guarantee because there's symmetry. Now, that doesn't mean this isn't going to 20 or 30 eventually. Yep. Okay. But I think that you just have to understand that. So, if you make 100, 200, 300% quickly, book 60%, let some ride, keep some dry powder, and again, it's all about your mentality because the worst thing you can do, look, when you lose money, your body physically reacts. There are chemicals going off in your brain the same way as if someone died or if you were in physical danger. So then when you make money, you make yourself feel bad. Like, it's a recipe for disaster because like you can't win to win. So by the way, I have an interesting stock here that I think could be, and we've talked about it before with what's going on. And this is a perfect example because Bitcoin's been taken off. Take a look at GME.
Yeah. I haven't looked at it today.
It's not doing much, but like it's got a beautiful,
so nicely. Yeah,
it's got a beautiful base.
Yeah,
I mean, and with Bitcoin doing what it's doing, this becoming more of a Bitcoin play. This actually outperformed during the course of the sell off. This is what I would like. This is what you should be looking for. What has speculative potential that's relatively lagged, not because it's done poorly, but just because it didn't go, rocket ship like Palantir or Hood or something like that.
Yeah, and these themes, people rotate in and out of them. So like if they let's say like traders get bored with quantum theme or those stocks peak and retrace or whatever they're going to do, they'll move on to the next idea if the market's still ripe for that. And this could very well be the next one. That's where you want to be thinking like, what's the next thing that could potentially pop off? And you have these stocks here that are sort of laying in wait, ready to roll. Could you explain to folks that maybe knew like why GameStop is a Bitcoin play right now?
Yeah, well, I mean, so again, for those who aren't familiar, GameStop, you're probably familiar with the story, the retailer that was, kind of not defunct, but just not doing very much. And then we had all this craziness with Roaring Kitty and all that. But behind the scenes, what had happened is a guy named Ryan Cohen had taken over. This is the guy that actually created Chewy, the online retailer. And, he basically got the company to the point where they weren't burning any more cash. They had, got operations stabilized, not really growing, but stabilized. And they were actually sitting on $1 billion. And this was before the stock kind of exploded last year in sort of Roaring Kitty part 2. Right. And so last year when that happened, and you can pull it up in the chart there, it's right there. They went out and issued like $4 or $5 billion worth of stock. And so what he did, so they issued about $3.5 billion back there. And by the way, in that other little spike there in March, which we called, we said that what he was going to do was come out. So yeah, go right there. We recommended that a couple days before that spike, that gap up. Right here. That you see there. Yeah. We said that he was going to come out and say that they were going to buy Bitcoin the way that MicroStrategy has. They did it and they issued another $1 billion in convertibles. So the funny thing about GameStop is you've got this retail operation, which is fine, whatever. Like it's not, it's making a little bit of money, et cetera. But then at this point, I want to say you've got $5.5 billion worth of cash that I suspect that they said they were going to put to work buying Bitcoin. If they bought any Bitcoin when they said they would, they're sitting on 30% gains on their Bitcoin. So, this is basically a MicroStrategy in training would be the way what I would call it. But what I find so interesting about it is, at some point, Roaring Kitty's going to roar again. Like the guy's still there. There are millions of investors who participated in the stock and made a bunch of money. And I think that's going to happen again in the next 3 to 6 months. And look, if we're going to live in a world where qubits and Rigetti go up 60% or 100% on nothing, companies that are losing money that have no revenue, this company going up, me saying this goes to 40, 50 or 60 makes a lot of sense to me, so this is, and it's, I mentioned gold as well. Just remember, 3 weeks ago, 4 weeks ago, all anyone could talk about was gold. Gold,
Yeah.
gold, gold, gold. Gold's going to 5,000. And by the way, gold is going to 5,000. We sat here and said, it's overbought. Just be chill. In fact, at the Maverick, we shorted it and made like 15% on our money. And so this is what you want to look for now is find those go-to outperformance that have now lagged, GameStop, gold, look for the next setup, and take your profits on things like qubits. Take that money, sit on cash, and recycle it into GameStop and whatchamacallit.
Yeah. Speaking of laggards, this is going to be a really clean transition for me. I don't get many of these since I'm not the greatest host in the world, but Bitcoin has been looking really good lately. It started moving higher, kind of leading the market there. What do you think about and maybe this isn't your vehicle of choice, but what do you think of like an Ethereum catch-up trade right now? This is pretty intriguing to me if it can clear 2,800 here and start pushing, since it's been such a laggard and it's finally starting to wake up, and a lot of the other coins are starting to wake up here.
I think it's interesting. We talked a little bit about the other coins last week. We were talking about. I think we were talking about Trump coin. Actually, was my idea that I felt like could go off, and we can visit that in a second. I like it. I mean, again, these are speculative things that have lagged as we see speculation picking up. And, the nice thing is, I'll go back to GameStop, which is more to, not to go back to GameStop, but if the market sells off a ton, I don't think GameStop's going to get crushed. Look,
right.
if Ethereum could go back to 2000, right? It's not, 2250, something like that. But relative to the upside that you're looking at, which is Ethereum was at 4,000 6 months ago, when off of the Trump excitement, Ethereum was literally above 4,000. So Bitcoin's back to where it was. So I look at that and look, maybe Ethereum has a 15% down, 80% up risk reward. That's pretty interesting, because if I told you everything that we know, that Bitcoin's where it is, all the continued movement we've seen in crypto continuing to go in the right direction, and I said, you would say, okay, well, this should be back at its highs or closer to its highs than its lows. Instead, we're much closer to the lows. So I like that risk reward a lot. All right, I think that's very intriguing. Just be ready if you buy it, to be ready to lose 20% of your money in like a week. Just have that mental state.
Yeah, I pulled up Solana too. I think that's kind of a similar look. It's not as extreme. Well, maybe it is. Yeah, it is. It's funny how the price action's so distorted sometimes on these charts when you're thinking like, oh, it hasn't gone down much, but in reality, it's gone from 260 all the way down to 110, and now it's fighting.
Yeah, it's crazy. No, I think both those are really interesting trades. Again, they're the same chart, by the way. The only thing is with Solana, you got 40 up, and well, it's funny is with Solana, you got 40 down and 80 up. But Ethereum, you had 15 down and 80 up, just looking at where the recent levels were and all that.
Yeah, so, and I pulled up the Trump coin thing. I think this is the right one, Trump USD, right here, and it looks compelling. And like you said, it's not a political statement at all. This is just, we're in the type of environment where crazy speculations like this can pop, and really start. Well, and this seems pretty coiled.
Look, your stocks and your crypto don't know the story. Mm-hmm. They don't know what they're worth. And let's just go back to qubits. Anyone who's willing to trade qubits should be more than happy to trade Trump coin, because they're worth about the same. I'm joking relatively, but I'm kind of not.
Right.
So that's what I said last week. I think that having a small amount in Trump coin with the market doing what it's doing is the kind of bet that you could just wake up and this thing's just at 25, whatever it is, very, very quickly. So again, qubits, Palantir, Hood, these are all these things that look like they could be up 50%, and now they're up to 50% in a straight line. We're giving you a group of things, GameStop, gold's a little different. Gold's just a quality buy. GameStop, Ethereum, Solana, maybe even Trump coin, that you're now long that potential, as opposed to if you own potential after it's happened, it's not that you're short it, but it's kind of exhausted itself out. So I think these are really good setups in a market where speculation has returned, and also then a market where we can just focus on the individual setups and not the market. So I think that we're going to start to see in the coming weeks, and especially in Q2, a ton of great earnings setups. Where for what I do, you're going to find companies that disappoint. I mean, I'll show you one today. We'll just throw it out here because we're not going to use it in the Maverick. Take a look at Viking, VIK. It's a cruise line. Awesome story.
Fancy cruise line.
Yeah, fancy cruise line. Company just went public a little while ago. Incredible economics. They came out, blew out every number, and then they said they announced their 2026 bookings, and they were only 35% sold for 2026, as opposed to the 37 that the analysts were expecting. And the stock was down 10% at one point today. I mean, are you kidding me? Like, really? So you blow away the numbers, and then we're talking about 2026. So it's May 20th, and they've sold more than a third of their entire 2026. And because they sold 35%, not 37, the stock down 10%. You buy stuff like that. Okay. Mm-hmm. And so this is what, because I'll tell you, 4 weeks ago, they announced this. Well, by the way, you still buy it. Stock's down 30 because it depends what the market's doing that day, right? If the S&P's it's April 9th and the S&P's up 11, I don't know, the stock's up 10%. But now you can find these individual setups and begin to trade them with some degree of confidence, with some sort of stability on the ground underneath you.
So speaking of earnings, since you brought it up, NVIDIA reports next week, and it feels like we're already starting to get the hype. I saw when I came into the office yesterday morning, there was NVIDIA on the Chiron of the muted CNBC TV up front by the conference room. I think, see if you agree with me on this one. I feel like since NVIDIA's earnings are kind of in a vacuum, it reports at a different time than a lot of the other mega caps, that it gets a lot of extra attention. And I think this time is no different, especially since it's stormed back from its April lows so quickly, and now it's kind of hanging around here after looking like it was going to break down. I think a lot of people were really scared about what was going to happen with NVIDIA back here, and it teased us a little bit with that drop below 90, and now it's ripped back to 133. We got earnings next week. Do you think it's just going to be deafening, all the noise around this one, or?
Well, so by the way, NVIDIA is the only one of the Mag 7 that's actually positive on the year, or it was yesterday or the day before. I mean, it's flat. Look, my rule going into earnings is very simple. If a stock is up a ton going into the number, reporting good earnings is very difficult for the stock to go up. If the stock, they're going to report a good number. We know that. Like, it's everything, and everyone else knows that too. So it's kind of a mix because the stock's up a lot going into the number, but it's kind of back to, it's still where it was a year ago, man. Like, I mean, so it's sort of treaded water. It's a coin flip. I think the number is going to be strong. But it's just, I look at that 1 year chart. So just think of this, anyone who's bought this stock in the last year, the average price is literally right about here. So the stock was at 130, it closed at 130.78 on June 20th. And here we are 11 months later, and it's at 133.77. So, I think it's a coin flip on this one. Ask me 2 days before they report, and I'll have a better view because I think it can move a lot going into that. But I'll tell you, and I'm going to share with this in the Maverick tomorrow. I have this data about the Mag 7. Hold on, I want to share this because we've been big fans of the Mag 7 this entire period. The Mag 7 actually had their biggest beat versus consensus in the last 3 years in Q1. Okay. And the Mag 7 have actually seen year to date negative 0.3% earnings revisions versus the S&P 493 is down 4%.
Wow.
So, this is what the funny story of this is the Trump tariff tantrum may actually push power back to the Mag 7. I wouldn't be surprised to see the Mag 7 lead in the second half of this year. Because the other thing, and I didn't save this chart, the Mag 7 are all down double digits except for Microsoft and maybe whatchamacallit. and Nvidia, or they're all down double digits year to date. So I think that there's a call for you, Mag 7, to lead the market in the second half of 2025.
Well, I like that. It makes a ton of sense too. And I think like I was noticing, and Apple just can't even seem to get off the mat right now, even with the market comeback. I mean, obviously it snapped back from its lows right there, but it's not doing much of anything. I mean, I don't know if this is residual, just like tariff fears or what, but yeah, it's definitely been lagging right here. What's your? Well, I won't ask you that one. I won't ask you what your favorite Mag 7 is. I feel like I ask you that all the time.
Well, but you know what my answer is going to be. My favorite Mag 7 is still Google.
I was going to say it's got to be Google.
Just because it's absolutely insane that it's trading at the valuation it is, with the company crushing numbers. Mm-hmm. And then I'll surprise you. What do you think what's the second one, the one that intrigues me the most after that? Maybe you've been listening, although it's
Amazon.
up a lot.
Amazon.
No, I was going to say Tesla.
Oh, okay. All right.
I'm very intrigued by Tesla. I wouldn't do it here, but at 300, I think Tesla is the one to own. I'd buy Google today, Tesla then. And it's funny is Apple still hung over from December.
Yeah.
So all the Mag 7 had a 2024 hangover when they outperformed so much. Yeah. And just some of them, the hangover is lasting longer than the others. And Apple had the biggest party. I'm looking at the stock hitting 260 on 5 days before year end on Boxing Day, 12/26. And so it's the one still like sitting in bed watching Netflix because it can't get back out.
That's fair. Bring Netflix back into the Mag 7.
It used to be FANG. It wasn't even Mag 7. It was like,
look at this.
It was the 4, and then it became they added something to FANG. It was like 2Gs or something. I forget what it was.
They did a bunch of stuff. They added 2 N's and then they took one away. And it was just sort of actively managed group of popular stocks.
No, but Netflix is amazing. Netflix is, look, I'm going to make a funny analogy for you. Netflix is gold 3 weeks ago.
Okay.
Look at this chart. Like that's going back to the 50-day moving average. This thing's going back to 1,000 or 1,050. Like, I'm not gonna go out and short it. Gold got just insane. Gold was like the most overbought it's been since like 1980, and I just couldn't sit by and let that happen without playing there. But that's what you see with a lot of these stocks. So you got stocks that look like this, take some profits. Go out, buy GameStop, secondary cryptos, Google, things like that, things that stumble, Viking. We got a lot of free ideas here today on Top Trades.
To jump on board your analogy here, Netflix missed the party invitation back in December here, and they're partying hard right now.
That's actually very, very true. Is you had a great base, and this is what I talk all the time about potential. There's long-term trends like Netflix, and then when things are very extended, they have negative potential, and then when they base, they have positive potential. And you want potential in front of you, not behind you. And if you put potential in front of you, like, so the thing that we do in the Maverick, we buy uptrends on a dip. There's potential to get back to the uptrend. What you do, you buy uptrends that have now getting ready to break out. Here's potential in front of you. That's what you want to be long. You don't want to be on the other side of it with a huge move and a really high RSI behind you. I mean, again, this classic RSI pattern here, just like gold was doing, got up above almost 80 RSI and then is going a little bit higher, but now it's going to start to peter out, and Netflix is going to head back, like I said, 1,000, 1,050.
Yeah. Going back to Tesla, Tesla is just the ultimate trading stock. I feel like it's technically obedient. It trades on Steam. As long as people hate Elon Musk and love Elon Musk and he's still there, I feel like it's always going to deliver these type of moves, since there's so many polarizing opinions about it. And that definitely helps. Like, I think, didn't you tell me last week that you said if Elon left, this stock would go down to $100 or something?
The company might go bankrupt.
Yeah.
Like, I mean, I said, like, if Elon left or Elon died, would actually be the one that we're, would be a concern. Yeah, I mean, it's a cult of personality. But I don't know. We talked about it for the other week. I've still been using my Tesla self-driving, and like I got to tell you, like this thing's going to be in the next 6, 12, 18 months, everyone's going to see it, and it's just going to be a giant wake-up call. So that to me is what gets me excited about Tesla. But again, I wouldn't buy it here. I'd wait for a pullback. Because also above an RSI of 70 here, 2 or 3 days ago.
Yeah, sure, definitely. I don't know if you've looked at this one recently, but it's one we've talked about in the past, and the financials aren't pretty. But Rivian is blasting off here, and I don't know what's going on. It's just drifted higher since earnings. I haven't really looked into it too deeply here, but this thing has gotten pretty solid here compared to how it was. I mean, this gap up here from 2024, wasn't this the Volkswagen news?
Yeah, I like Rivian a lot. I think this is really interesting is that they've got the financing in place. They've got actually a product that everyone loves who uses it. Go pull up the 5-year chart on Rivian.
I'll put up a weekly.
And we haven't talked about this in a while, but but I think it's going to be good. The Echo trades.
Oh yeah.
Yep. Like what's to stop Rivian from being a $30 stock? Like I don't love buying Rivian right here.
Right.
Because it's got whatever, an RSI of
this is
78.
So,
yeah. But anything back to 14, 15, this is very intriguing to me.
Yeah, I still own a few shares of this sitting around, and not a big position at all. But I've kind of just been picking up little bits and pieces of it because I do feel like it has the potential to catch fire again and be a $30 stock at some point. I mean, even if it broke out of this little base here, I think it could go all the way to 26.
25. Yeah, 25 is what I was like saying. Yeah, that's another good one. I'm very I would pounce on Rivian on a pullback.
Yeah, if it was nice and tight here, so like if it retraced maybe down to 15, hung out, like, but this is what 1, 2, 3, 4, 5, 6, 7 weeks in a row up, off of those lows of $10 all the way to 17. Yeah, give it some time. But I do like how this is setting up. And it's one of the ones where I wasn't really paying close attention to it, and I just was looking at it the other day saying, oh, it's still going. Oh, it's still going. Here it is.
Yeah, no, this is one to put on the radar screen. Like, and I kind of just love these, and it gets back to the GameStop thing. I love these like speculative bells of the ball of yesteryear.
Yeah,
because and the companies are actually, so there's a lot of analogies between Rivian and GameStop in many ways. That the Rivian balance sheet, while not awesome like GameStop's, it's a lot better now with the financing that they have. So like I just don't, not that many people realize that. It doesn't mean it's great, and the Rivian numbers, actually the sales still came in a little light and all that, but this company ain't going away. And so, there's an old saying that I had with a lot of speculative stocks, and this is actually through a market cycle. If it survives, it triples. Yeah. Right. And I feel like that's probably, or 10 bag. If this survives and gets through the promise, because people love the product. Yeah. So I think, this has got, $20 billion market cap. If we woke up and this is 3 years from now and Rivian's $100 billion market cap. By the way, Rivian was $100 billion market cap when it came public. So it's not like it could never happen. That's a very intriguing idea.
I see a lot of them around me now. I notice them more and more. I see a lot of, I don't know if you have these around you, but I see a lot of the Rivian Amazon delivery trucks. They're very skinny and very tall. They look like they could tip over in a windstorm.
Is that what I see? Electric Amazon trucks, but I don't know if they're Rivian or not. But no, what I was going to come back though too. What's intriguing about the Rivian idea is that EV sales have still been going up nicely. It's just Tesla that's been getting smoked because of the political stuff. So you basically have a ton of people who, and by the way, Tesla doesn't have a Cybertruck's, ugly as, I don't want to throw a curse word in here, but it's not a good looking vehicle. Rivian looks great. And you've got a bunch of people that are out there who own Teslas that are looking to, buy something else because they don't want to have the political, whatever exposure or whatever. I just bought a Tesla, so I obviously don't care. Yeah, that's a very intriguing idea. This one could have huge upside, in my opinion.
Yeah, I mean, I have noticed over the past year or so, like every SUV around me seems to be electric. It's either one of those Hyundais, or the Rivians, but I mean, it's not going anywhere. I was skeptical of it really like getting mass adoption at first, but I think commuters just love them because, like, why wouldn't you? I mean, like, I know the range is an issue if you're like traveling a lot, but if you're just driving to work every day, I mean, they're perfect.
Well, and I'm going to tell you, once people get full self driving, like, it's going to change the game. People are, anyone who does it will just be like, why was I driving before? Like, I was joking. I was actually joking with my girlfriend. I think I was like, in 10 years, kids are going to be like, you guys used to hold on to the wheel and you would steer. And like, why would you do that? Like, you had a telephone with a cord that went into the wall. Who does that? Like, I think it's going to be the same thing.
Yeah. My daughter asked me the other day what kind of iPhone I had when I was her age. And I was like, oh, I got bad news for you.
it was called Bell, Bell iPhone.
Had to string that phone cord under the door if you wanted some privacy to talk in the other room. Exactly. Let's see here. What else we got? There are some.
Let's go through some charts that people were asking.
I have a short list of chart requests here that I've been from the chat, and the first one is, and I'm not familiar with a lot of these. Some of them I am, but we'll see. First one is TMC, the metals company. Is this rare earths? This is rare earths.
It is. This is a highly speculative rare earth stock. Look, it's got a good chance to go to 6, 7, 8, and it's got a guaranteed chance to go back to 3. How's that for an answer?
I think that's fair. I mean, obviously, I think this is trading on some of the rare earth political hype that's happening out there. And you can see, I mean, like, look when this thing really started to move right here in December. I mean, an incredible move right here. I definitely would be feeding the ducks on this bad boy, especially after these past few days where it's gone from 3 to 450. I think that's fair, right? Take some money off the table on this one.
Yeah,
I could go a lot higher, but
if you own it, take profits. If you don't own it, stay away. And like I said, I'd say it's 50-50. It goes to 6, and 95% it goes back to 350 in the next 6 weeks.
That's fair. All right, let's see. What's next? A couple requests for URI, University of Rhode Island, maybe? No,
United Rentals.
That's interesting.
I think it's the same person was asking multiple times about it. So
okay.
Kind of no man's land in terms of the chart. It hasn't done very much, but you've had a very, very big move off of a big sell-off. Numbers have been headed down. So now I'm going to my earnings revisions. Earnings revisions going into late last year have been positive, but they've been going down now for 6 months. And so the chart's not really giving you anything. You got this big base. You're right in the middle of the range. You got negative earnings revisions. The company has missed a couple quarters recently. This is just a pass.
I don't hate it, but I think I don't think it's going to be one of the better trades out there. It's not
that's exactly right. So on the chart, it's not super oversold. It's a little overbought. It's right in the middle of its range. It's got negative revisions. It's been missing numbers. It's a good company. It's just like, I wouldn't be involved. I don't see any real opportunity.
All right. The next one is CRWV.
CoreWeave.
This is CoreWeave. This is this is another one. This one's just doesn't quit.
The best thing I could say is go back and look at the chart of Reddit and what that did when it first took off. I just, as a pure speculation, look, there's no basis for anything. There's no numbers. I mean, there's numbers, but no, they haven't reported anything. It's just momentum. Look at what Reddit did when it broke out back in October, and then it just stayed above that. And, so we're at Reddit 150 right now on CoreWeave. It would be the analogy I'd say. And Reddit eventually went to 250. or 225.
220, yeah.
Mind you, it's now at 100. So
Mhm.
that's the best I can say on CoreWeave. It's hard to, just pure speculation. Having a little bit on it goes a lot higher, but you really don't have anything underneath you. So, and this thing could be 60 in a day, in a week.
Yeah, and
So
refresh my memory, this one had something to do with NVIDIA or some
no,
relation
this
with
is,
NVIDIA, or is
yeah,
it?
it's a big like data center related.
Okay.
Yeah. So software solutions and cloud services, they basically run data centers. And then the whole thing was NVIDIA owns a stake in the company.
Okay.
And there was some question about, like, they're one of NVIDIA's biggest customers. Were they basically financing a customer to juice their numbers? I don't think it really holds up. But yeah, the problem with these is, like, I'll give the blackjack example for the newbies. Like, I use blackjack and probability a lot. The great thing about blackjack is I walk up to the table, I know how many cards there are, I know how many shoes there are, etc. Here, I'm walking up to a table and I don't know if I'm playing blackjack or poker or what game I'm playing, because the game's just started. So there's just not a lot of the stock price doesn't have an identity. So stock prices have identities, which is why charts work. And that identity is made up of the average price of all the participants that have bought the stock and how they're going to react around those prices. Here, we just don't have anything. We got 2 months. So it's hard to make high conviction calls because there's just not enough data. The more data you have, the better conviction call you.
Yeah, that's fair. That's fair. I like that. All right, Dollar General was the next one. Wow, another huge move. And I'm assuming this is a bit of a tariff relief move for Dollar General.
Hold on a second here. I think they also reported some good numbers. I'm pulling up, just so everyone knows, I'm pulling up my Bloomberg charts where I have more data when I'm looking away.
Yeah, it looks like they had a positive earnings surprise back in early March and have been climbing and then bounced nicely off the 50-day right here and have really taken off. Good grief. Like,
yeah, and I was looking to see what the short interest was. It's not crazy, but that just feels very squeezy to me. I don't know. Like, look, you can buy this on a pullback on the chart. The question I have is earnings revisions, which I think have been very negative. I mean, this stock was down a ton because before the Trump tariff thing, earnings revisions were just nasty. Like, I mean, 2025 was supposed to be 15.50 2 years ago. Now it's going to come in at $5. So the best thing I can say is that the earnings revisions have been so bad for so long, it maybe doesn't matter a little bit, but I certainly wouldn't buy it up here. Coming off a very overbought bounce.
I mean, overbought too, and you got this huge gap you're dealing with that you're sort of in the middle of no man's land of. And
so look, with buying at these moving averages, between 80 and 90 looks kind of interesting just from a chart. And they beat a number. They hadn't beaten a number in a long time. So, but again, I just didn't feel like a high conviction bet. I mean, I think there's better stuff out there.
Yeah, that's fair. I feel like that's a theme. Better stuff out there. STRL, I think is if I wrote that down, I can't even read my handwriting. This is interesting. What is this one? Engineering and construction, industrial services. This is another one of those that it reminds me of almost like the HIMSS chart, where it was partying hard and then it got hit, in the new year, and now it's just ripped right back to this level right here. I would give this one some time. I wouldn't be chasing it here, but it looks like it's got really positive earnings. What do you say?
This is an interesting. I'm not familiar with this company, which, I'm not like Kramer and say I know every company.
Mm-hmm.
Has had awesome earnings revisions. Has been beating numbers, although they missed this most recent quarter on EPS. Mm-hmm. I'm just pulling up the EBITDA right now. They beat on EBITDA. It's a nice space. Like, if you operate civil construction, specialize in municipal and state contracts for highway paving, water, sewer. I mean, if you believe that we're going to see reshoring or anything like that, then you got to like this. It looks like the stock might have been doged to a certain extent. And when I say that, there's a lot of companies that rallied with Trump, and then Doge came out and like they just sold off because people were worried about spending cuts. This is pretty interesting. Getting back to the chart, I wouldn't buy it here. I'd buy it 150, 160, but
Right.
it's a very interesting company. This is two good ones. Rivian and this, actually, I'm mostly not interested. 98% of the time, I'm not interested. That's like, and by the way, you as an investor or a trader, that should be your statistics too. 98, if not 99% of the time, someone brings you an idea, you shouldn't be interested. But it's just that's the way the math should work, right?
Right. Yeah.
But these are two that at least would get on my radar screen, Rivian and this one.
Nice.
And again, I'm unfamiliar with this one. So
Okay, that's a good one. I think it was maybe Charles that brought that one up. That's a good one. I'm not familiar with the company either. I like it.
yeah,
Let's see here. Next up is Deckers Outdoors. This is Uggs. Is this Ugg boots?
yeah,
And a bunch of
yeah,
other brands.
yeah, and
Looks
Hoka.
like people were not happy with earnings back in February.
Well, yeah, we got caught with this one actually at the Maverick.
Okay.
It's gonna be an interesting earning. So what happened was they had a lot of it's Hoka was the challenge.
Oh, Hoka, right, the running shoes.
Yeah, I mean, look, they dropped their guidance for the quarter tremendously. This quarter they're about to report, and kept the full year guidance. And you got just massive distribution out of the stock. And then it got Trump tariff tantrumed, which took it to the next level. They report on Wednesday.
Thursday.
All
night.
I can is it Thursday? Oh, sorry, today's Tuesday. All I can tell you is whatever it's going to do at the end of this week, it's going to do a lot of it. How about that? Like this stock's going to be at 100 or 160. It's tough though because it's just I don't know. I know they're going to beat the number. There's no question. That's what this company does. They've beaten every number since they've been public. The question is going to be about the guidance, and I struggle to see how they hold guidance for the full year, given everything else. And all of the things held equal with the stock from up 100 from 100 to 130, I would say it trades down on that, and it's got a chance to trade down, 20%. So I'd be very careful with this one.
Yeah, that's fair. All right, TSM, Taiwan Semiconductor. I think didn't we get asked about this one last week?
Yeah, maybe. There's also a lot of people. They're on the call are called every week, so they ask the same stocks, which is good. Love TSM. Look, I think TSM's a huge winner. I think TSM's, it's already one of the largest companies in the world. I think TSM is going to be the part of the Mag 8, or I don't know what to call it. I got to come up with something more clever.
The Elite 8.
Excellent. The Elite 8, you're just back in this range. Look, also, this is the NVIDIA chart. It's the same chart. I mean, it's a little bit better because this is the NVIDIA chart. It's I'm just looking at it. And so it's okay if you own it for the long run. I think it's great. I don't know that I'd put fresh money into it right now. If you hold it, it's fine. Someone mentioned Aurora. I've been doing work on this one. This one's pretty interesting. They have autonomous vehicles, semi trucks, and they have ones going from Houston to Dallas right now. My dad was a truck driver, so I spent all my summers truck driving with my dad. So I've been trucking across America, I don't know, probably a full year of my life. It's a very interesting company. There was a big short report that came out last week, which is why the stock gapped down. This one's pretty interesting. So this one gets back to the list that we did, GameStop, those cryptos, things like this one that I think if speculation is going to have reemerged, this is one where it wouldn't take very much to see this be a $10, $12, $14 stock. I think this is very interesting down here.
I got a joke question for you about this one. Do they just push the trucks down a hill?
Yeah, exactly. You didn't know Texas is all downhill, No. So because they actually can use other people's trucks if they wanted to. It's just autonomous. I think they do use their own trucks, but
speaking of interesting vehicles, Joby is something I was watching. Waiting for it to break here. It snuck above a little bit, waiting for it to break above like 740-ish to maybe try to get involved in something like this. just because, like we were saying earlier, like it's not like a GameStop, but it's one of those stocks that maybe this is one of those laggards that can really catch, one of those speculative ones. And you know how I like these. So
I like it. I like look, I think Joby, Aurora, like, GameStop's a different type of thing. These
yeah,
are all the kinds of names that with these other names doing what they're doing, we could just wake up and you wouldn't be surprised to see this stock at 10, which bum was where it was 5 months ago.
right. Yeah,
So the like, if we got a stock that's at 2 and I tell you it's going to 10 and it's never been to 10, well then okay, maybe. Well, I guarantee you this could go to 10. How do I know that? Well, because it just did.
yeah,
So I like this. I pure speculation. I don't love the business here.
right. Sure.
But as a speculation, I think it's very interesting. Yeah.
Yeah.
So by the way, I was pretty sure this Aurora just installs their technology on other people's trucks. So
Okay. Well, that's even better.
yes. So they go and they'll put it on a Peterbilt. I'm looking here on whatchamacallit. Yeah, it's a pretty cool company.
That's interesting. And then another one that we've been tracking, another big time laggard is AI, the stock, not the theme. Earnings are coming up here, and it tried to sneak above resistance right here. But I mean, I wouldn't step in front of this thing ahead of earnings. I know we have like a longer term, like share purchase that we made a couple of years ago that we're just sort of hanging on to with this one. But I mean, I think it could recover and move into the 30s, perhaps. I'm really falling more and more out of love with the idea of this company coming back significantly, since it just has been back and forth and just kind of a dog. But if it does pop, this could be one of those laggards that could run maybe a little bit.
I think the statement you just said is the most powerful thing. So I actually had at my previous company, I had a buy on this that I put out in 2022 and made a double in the stock. But then they started missing numbers. And that's my challenge, is that the company just has been missing numbers. So there's a quirky thing here. You take something like Joby doesn't have any numbers to miss. So it's like, it's almost a little bit more tradable. Qubits doesn't have any numbers to miss. There's no numbers there. It's got nothing. AI actually has a real business and they've got numbers to miss and they've just been missing them. So like I'm pulling up revenue revisions right now. Yeah, I mean, it's hard for me to get excited. It's just been too much. There's just too much evidence. So of all of our laggards, while I give this one possibility, I certainly wouldn't give it probability. And it's probably the lowest possibility of any of the laggards. There's just too much exposure for it.
Yeah, that's fair.
And it's an interesting company. Like Thomas Siebel's a real guy. What they've been doing. With how they use AI, the Internet of Things, and all that. But I just, as a trading vehicle, I would be the last one on my list of all these laggards.
I really love the ticker. I wish they would do better, because the ticker.
Well, but do you know that they've changed the name of this company three times?
Yeah, that's all.
So it was, So it was IoT. It was IoT, which stood for Internet of Things, and then they changed it. Yes, that's a little sketchy. Like I don't love that. I don't love that. Let me put it this way. I'll say this. I've been doing this a long time, and I can't recall ever having crushed it on a company that changed its name 3 times. I can't recall. You'll have something like Meta that changed its name once.
It's the only exception.
Yeah. No, I could probably find a couple more because you get these corporate rebrands. But you change your name 3 times, and I'm like, yeah.
Square.
Just don't need it. Okay, Square. Like
that's. I mean, no. I mean, I'm saying that, like, look how terrible they look, and now that they're Square, Block, and now they're XYZ is the ticker, so they're changing everything. Yeah. Stocks in the gutter. Come on. All right, one more. BRBR. Oh, that one.
I know this one well. We like this one.
Okay.
Company's got a great history of beating numbers. Got super oversold. It's whether it gets back to 80 or not, it's going higher, back up to that trading range, at least 70, 75.
Okay. All right. I like it. Let's check in on the market real quick, see what we're doing here. I gotta say,
doing the same.
Yeah. But I'm surprised that we haven't seen a bigger move lower yet. Maybe it's coming later this week, but the fact that like we were able to gap down yesterday and then people were still buying into that, it's pretty incredible, this winning streak that we're on lately. And so, I'm still keeping that in the back of my head. Like, this is a time to be, like Enrique and I were talking about, looking for those fresh setups and not chasing the stuff that's extended here, and realizing that the market's a bit overbought. We're probably going to see at the index level at least some sort of reset consolidation here at some point. And we just have to be aware of that. And, it's a market of stocks right now. There's a lot of groups like the quantum stuff that's breaking out if you're a short-term trader. There are going to be some earnings opportunities coming up. We got a lot to look at here in the markets. Any last words?
Yeah. Well, I just, corrections happen slowly and then all at once. I don't know. Like, it's just like, I think we can sit here. Well, you'll sound like a broken record, and then all of a sudden you'll look back and 3 days later and you'll be like, oh, there's like 6 pieces of the record on the floor. So be patient. Be patient. That's the, don't buy extended. Don't buy potential behind you. Buy potential in front of you.
All right. I like it. And quick programming note, you guys, no top trades next Tuesday. We are off for the week. It is our spring break. But we will be back after Memorial Day with a fresh episode for you. So we will see you then. Thanks for joining me, Enrique.
Thanks, everyone.